Good morning and a warm welcome. Sage for Kalkine TV reporting to you live from Sydney, and you're watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from yesterday, starting with the US market. And the US Treasury yields edged lower on Thursday as the market struggled with reduced liquidity, while Turkey's lira weakened further after its central bank cut rates. MSCI's gauge of stocks across the globe was flat, and stocks on Wall Street were mixed. On Wall Street, the Dow Jones was down 0.17%, but the S&P 500 was up 0.3% and the Nasdaq was up as well, 0.4%. Taking a look over the newsmakers, and Apple is pushing to accelerate development of its electric car and is refocusing the project around full self-driving capabilities, according to people familiar with the matter, and aiming to solve a technical challenge that has bedeviled the auto industry. For the past several years, Apple's car team had explored two simultaneous paths, creating a model with limited self-driving capabilities focused on steering and acceleration, similar to many current cars, or a version with a full self-driving ability that doesn't require human intervention. Chip makers rallied after Nvidia issued a strong quarterly forecast and earnings update, and Nvidia shares gained 8.25%. The Philadelphia Semiconductor Index put on 1.79%. And retailers were also strong as Macy's and Kohl's continued a week of well-received earnings updates. Both chains beat profit and revenue expectations, and other retailers including Gap, Bath & Body Works, JD.com and Victoria's Secret also rallied on earnings news. Cisco slumped 5.51% to steer the Dow lower after supply chain issues weighed on its quarterly revenue forecast, and cyclical stocks were held back by signs of a seasonal increase in COVID-19 cases. Daily tallies have risen in more than half the states in the US, and the national daily average has increased by 14% in the last week to 83,000 cases a day. And important news now, according to the US Department of Labor, the number of people seeking the unemployment benefits further dropped to 268,000, witnessing a decline of 1,000 in the week ended 13th November. Let's take a look at the European sector now. And the European shares ended lower on Thursday, weighed by weakness in commodity-related stocks amid declining oil and metal prices and breaking a record-breaking six-day rally fueled by the strong earnings. The Pan-European Stock 600 index dropped 0.5%, its first fall in 7 sessions, with energy stock and miners dropping about 2% each. And London equities extended losses on Thursday, with the benchmark FTSE 100 remaining below 7,300 as investors awaiting key macroeconomic data scheduled to be released on Friday. And the GfK Group is slated to unveil the GfK Consumer Confidence Index, while the Office of National Statistics is readying to release the United Kingdom retail sales date for the month of October, the first month after the withdrawal of furlough scheme and the termination of stamp duty holiday benefits. And earlier in September this year, the retail sales dropped by 0.2% as the proportion of online sales continue to supersede the in-store sales, even after a full-scale resumption of almost every commercial setting following the removal of pandemic restrictions and social distancing guidelines. And alongside the retail sales data, the ONS will be releasing the public sector net borrowing for October of 2021. The public sector debt in the UK has been hovering near record high levels, with the total debt hitting £21.8 billion in September 2021. And according to data released by the ONS, the net debt excluding public sector banks stood at £2,218.9 billion at the end of September. This equates to 95.5% of the UK GDP, the highest ratio in nearly 6 decades, and such levels were last seen in 1963. The FTSE 100 lost 35.24 points, or 0.48%, whereas the mid-cap average FTSE 250 advanced 140.55 points, or 0.60%, effectively narrowing the gap from the 52-week high. And now we've just reached a time for a small break, but please stay tuned. I'll be back with the European and Australian market updates.
Hi there, James Preston for Kalkine TV. Are you into gaming and virtual reality? Does AI and the endless possibilities it entails capture your interest? Or are you constantly trawling through the web to try and discover the latest updates and innovations in the tech space? Well, let us do the work for you. From the latest product launches to shocking affairs on the World Wide Web, exclusive interviews and information about the top companies like Apple and Google to brand new tech startups vying for your attention. Kalkine's Tech Beat has the latest in what matters in the world of technology. Join me every single Thursday on the Tech Beat, exclusive to Kalkine TV.
Welcome back to Kalkine TV. This is Sage and you're watching the Global Markets Roundup show. And let's take a look at the Asian markets, just as promised. Japanese shares eased on Thursday with cyclicals and oil companies leading the decline, but they pared the losses after a media report that Prime Minister Fumio Kishida's stimulus package will be larger than initially expected. The Nikkei share average ended 0.30% lower, but it cut a big part of its losses after the Nikkei Business Daily reported Japan's economic stimulus package will likely involve fiscal spending of around 55.7 trillion yen due to huge amounts of cash payouts. China's stocks closed lower on Thursday, led by metaverse-related shares as the state media flagged risks, while real estate developers fell amid the liquidity woes. And the blue-chip CSI 300 index fell 1%, while the Shanghai Composite Index lost 0.5%. And the South Korean shares ended at 1 week low on Thursday, tracking Wall Street's overnight drop on the rate hike fears, while a record daily jump in domestic coronavirus cases also weighed on the sentiment. And the Kospi closed down 15.04 points or 0.51% at 2,947.38, extending its losing streak to a third day. It slid 1.16% on Wednesday. Let's move on now to the Australian market. And the ASX 200 benchmark had inched 0.1% higher on Thursday. A number of ASX 200 shares, including Nanosonics, NEXTDC and WiseTech Global, are scheduled to hold their annual general meetings on Friday. And yields on the benchmark US 10-year Treasury notes were last at 1.58%. They've now jumped from a low of 1.415% last week. And the bond moves are expected to remain choppy, but on the other hand, the dollar index fell 0.1%, with the euro being up 0.33%, and Turkey's lira shed another 3.3% after the central bank cut rates by 100 basis points to 15%. And oil prices edged higher despite the reports that China is preparing for a crude reserve release, and Brent crude was up 53 cents or 0.7%. The West Texas Intermediate crude futures were up 18 cents. And the gold prices fell after the US jobs data strengthened the rate hike bets. Spot gold fell 0.3%. And the most traded iron ore for January delivery on the Dalian Commodity Exchange ended trading 5.1% lower. And thank you for your company on that report. That's all for now, but keep watching Kalkine TV for more of the market updates and live expert talks. This is Sage signing off.